Hello, everybody. This is the Chinchilla Pickin' podcast. It is November 2nd, 2021. My name is David Underwood. I'm always here with Brandon Beaver. We hope to, as always, to be entertaining, educational, and uplifting because we want everyone to make money. Brandon, I kind of stumbled through that. How are you doing, man?
I'm doing good. How about you?
Well, you know what? I tell you what, I'm a fan of Dave Portnoy of Barstool Sports, fun guy, right? I don't really follow him for stock advice or nothing like that. I just think he's fun and interesting, right? And he had this pizza out, like everybody knows the rules pizza, and I was like, I'll give it a shot. The guy's a good character. I'll give it a shot. So I go to Walmart, and because that's the only place that sells it, according to him on his Instagram. And I go there, and none of it on the shelves, none on the shelves. So I say I'll pick up a few other things. Lines up the aisles and everything. Lines forever. You got to wait an hour to get anything. It's just it's not worth it, man. It's like Christmas time.
Labor shortages everywhere.
I know. And I was bringing it all back to stocks and investing in business. Labor shortages. Yes, that was the whole point of that.
You go to the grocery store and you see something interesting. Do you look at the back of it to see what company makes it?
Sometimes it depends. If it's something new, and I haven't done that before, yes. It all depends. It all depends because a lot of the stuff I have paid attention to that now over the years, because you don't realize that, but as a stock investor, after so many years, you start paying attention to some of these companies because you've heard so many stories and read articles and analyst opinions about all these different companies over the years that you're like, is that made by Mondelez? Is that who that is? And now you're aware of that. I just mentioned them because they had earnings today.
I'll look at parking lots and stuff and see who's full and who's not.
Yeah, that's another way. Unless you're Aldi. I mean, Aldi doesn't really ever have a full parking lot, but they have a small store to begin with.
And they have loyal customers.
Yes, they do. I'll give them that. I will give them that. All right, let's get into the show.
I don't like that whole coin in the cart thing. That gets me.
They're a European company. They got to stick with what works for them. Let's get to the show, shall we? All right, guys. As you know, the rules are for the show. Rules. Brandon and I get together 5-10 minutes before the show. And we tell each other what we're going to talk about. We do not discuss it. You hear the live discussion here on the show. Before the show, we talked, and I get to go first. Woohoo! All right. Happy Thanksgiving month to me. I don't know. I am. I have a roll number of a just I don't know if anyone knows this. I don't know if anybody really cares. It is November, and at my work it was like Native American Heritage Month. I'm a registered enrolled member of a federally recognized tribe out in Oregon. I'm not going to name it, but it was funny. They brought me up and hey, anything you want to say? I'm like, no, dude, I'm good. It's November. I was like, I'm good. Whatever. I thank you, but yeah, let's get into it, guys. What I got tonight. First off is KULR. I know I've mentioned this numerous times. So why am I bringing it up again? Right. Dave said buy and hold. This is a long-term buy and hold. Why am I bringing it up again? Well, it's had a recent big gap up. So I kind of want to discuss, okay, why is this having this big gap up now? And then what's the future look? And, should you get in now after this big gap? Should you not? What's it going to look like going forward for this company? So KULR had a number of cool announcements recently. They had a partnership with a Heritage Recycling Battery, and it's one of the biggest battery recycling companies in the United States. And KULR's partnership was to help with the transport of batteries, because KULR's system allows you to safely transport batteries without any kind of explosions, overheating. That's the kind of main goal of them, is to make batteries safe, right? KULR makes it better, makes it cooler. Huh. So KULR had that deal go through I think that one was about a month ago. That one got announced, and we weren't looking for any real income or revenue from that for at least 4 to 5 months down the road before we see it on the earnings call or earnings statement. You have that, and then today I want to make sure I get this name of the company correct. So I pulled it up, and I want to make sure. And this is one thing I have talked about on the show about a possible future contracts for KULR, I was saying you got to keep an eye on this because they made some moves with the board of directors. They had an Air Force general join them. And I was wondering, they're going to get some kind of government contract here soon. That's something to look out for. Well, sure enough, announced today, this morning, KULR has joined the Clarios project in the United States Department of Energy. They now have a government contract with Department of Energy for transportation of batteries and to help with keeping the batteries cooler. This is what I was talking about. KULR is going to continue to get contracts. They got the contract with the Heritage, I think it's Heritage battery recycling, and now a actual government contract with the Department of Energy for batteries. So as they continue to grow, if these contracts, once they start seeing the revenue come in and they report it on their earnings, you're going to see them jump at those times. Now, it's a small company, so I don't think that they could take on too many more contracts before they get their bandwidth too much for them, right? Just 3 months ago, they only had 7 guys because they created new technology. And so they were trying to market this new technology and then enlist help of other companies to help build it. But they own the patents and the rights to all this technology. And that's what makes them valuable. Now, if KULR starts actually producing from these contracts and we start seeing the earnings, you're going to see bigger gaps up. And this is where I said I'm going to start deleting some of my position at $10 a share. I think there's a bright future. It may hit 20, but I don't think it would stay at 20 unless there's other contracts I don't foresee coming down the road with this company.
So with this government contract, that basically provides them a baseline source of revenue.
Correct. Yes. That, and with the largest battery recycling company in the United States, now they have revenue coming in. Their total revenue, like last year, was 700,000. They didn't have much, but that the battery recycling one was already valued in the millions of dollars. And then now with this government contract on top of it, they're going to have a solid state of revenue coming in. So now they could reinvest that in the company and actually grow to produce their own technology instead of, hiring other companies to make their products. They can make it themselves because, they're smart gentlemen that are developing these new technology, keeping batteries safe and cooler. And this is important because that is what got the Boeing Air Max grounded.
Right.
The batteries were smoking. They were getting overheated in the planes. So with cooler technology, they could keep those batteries cool. And thus now you could have batteries on planes again. This is why I thought like a couple months ago, this was a company that had a lot of growth potential if they can iron out the details. I knew they would have a big gaps up and definitely head up to, 4 or 5 guaranteed. But as I started looking into it more, I realized, okay, there's a lot more growth to this company than what we realized, especially as America moves towards batteries and away from non-renewable fuels. Thoughts, Brandon?
And one of the biggest things too in the future is going to be electrifying planes. And we're moving in that direction where we're going to have electric everything.
Right. And they already had a partnership at one point with Airbus to test out and do some research on some things with Airbus. And so it's not like this is new to them. They had their battery system was on the Mars rovers. I mean, come on. I mean, they've been to Mars and they've been on Airbus, and now they're just continuing with these routes, and there's no limit to where they're going to be able to put their technology to use when it comes to batteries. This is definitely a company. It's not too late to get in, but I will preface it with this. Anytime a company has a big gap up, I would keep an eye on it, wait for a dip, because there's usually a small dip back down, and then get in on that small dip. But if you're buying for long term, you might as well just put it in and hold because it's long term.
And then you just add to it over time.
Yeah.
If that's what you're looking at. If you're trading, you wait for a base because you don't want to get caught on the stock filling the gap back down.
Yep. Exactly. And we'll see. I'll keep an eye on this tomorrow and see if it maintains it above 330. Last time it went up to this level, it dropped back down to 290. So if it maintains it this time or even goes higher, then this is a solid. We've created a base now at 3. So
then if it goes back down to 290, you rob an armored truck, back it and load up.
Yeah, dump it in there and just throw it all in KULR, guys. KULR, KULR. All right. I've said enough about this company. If you've been listening to our show and you don't know anything about KULR, I don't know if you're actually listening to the show. But it's a great company. I just wanted to talk and briefly hit on what has happened, why it's happened, and the contracts they've signed, and really narrow those down. I see more government contracts in line for that. But let's move on. I don't want to get off topic here too much. So this next company I wanted to talk about, I know you and I both agree on. We've mentioned it before, but I also want to talk about because it's also gapped up. These are two companies we made calls on, and they both have gapped up and jumped up, and you've had good returns. KULR, I say, it's a good opportunity if you're going to buy long term, put your money in and just let it ride. This next one, it's same thing. If you're going to buy for the long term, it's never a bad time to put your money in. But if you're going to trade it, it recently went up as well. I would wait for a drop back down. But this one is a very good company, and it's called Nvdia. All right. And if you're not already in it at this point, you might want to hold if you're in it, I would hold. I wouldn't sell. And the reason why, you might have some headwinds. You might have some negative news here recently. A lot of the companies that have given earnings, this earnings round, Brandon, last earnings round, 80% of companies beat earnings in the S&P. This earnings rounds, it's 70% of earnings are beating S&P on the top number. I'm talking about revenue. Sorry, not earnings, revenue number. Sorry, I apologize. Top line revenue number. And the reason why that's disconcerting is inflation. And the companies are saying inflation is a headwind. And that's why I like Nvdia as a play against inflation. Because if I'm concerned when companies such as, i.e. Apple, in their earnings are mentioning inflation as a headwind, that makes me concerned. So how can I play against that is Nvdia.
Yeah. And Amazon, which I'll talk about later in this podcast. That's huge headwind for them was inflation. Labor,
right?
costs, transportation costs, equipment costs, and so on.
But when I look at Nvdia, they're nobody else really has chips or the graphics cards that compare to them. You need it for everything, virtual reality, gaming systems, computers, any kind of devices, that require a high graphics, such as if you need the latest date Zoom meeting, what have you. You need those Nvdia graphics card. In my laptop right now that we're doing this podcast from, I got Nvdia graphics card in my laptop, because I bought it for VR gaming. And this is what you need to have in it. And since they basically have a monopoly on so many areas of the sector, that they can charge whatever they want.
So
they could just raise their prices. Taiwan
Semiconductor is the same. It's in the same boat here. In fact, Nvdia is one of their customers. And Nvidia's been on a tear since that stock split. It's been
on a
tear.
It's been going and going up. We've talked about in the show, we've made the call that it was a buy. Right now, like I said, if you're going to trade, I would wait for a dip down. But if you're investing for a long term, hold or, maybe even load some more in, because I don't think inflation is going to hurt it.
Why? Yeah, because that's what everybody wants, and everybody needs those semiconductors. That's what's causing the electronics shortages right now, and the automotive shortages, because everybody's trying to get those semis. And if you could take advantage of that, and they're able to raise their prices, those are the companies that you should be in right now, I think.
Oh yeah, they have all the leverage in the market, in the sectors, everything. It's all in favor of them. There's not a reason why not to buy them. I know basically I'm just saying stuff that you agree with, and it's all pretty simple. But and I'm sure a lot of people, our listeners, are like, Dave, you haven't come up with anything new in about a month. But I'm like, I don't have to.
No,
The
you
ones
don't.
I'm coming up with keep moving up.
No, and you don't want to be reaching either and trying to force things.
Right? Yeah. And why if the boat's going in the right direction, there's no need to paddle.
Right.
Just let it go, man. Let it go. We're doing well. Nvdia and KULR are doing very well for me. I've made a lot of money. I'm going to continue to make a lot of money. And I want you guys to join me on making a lot of money. I don't want to do this on my own.
Why? Because we want
Everyone to make money. Except for that one person we both know, Amber. Sorry.
Amber and the money.
Yeah.
I'm rooting for them personally, but not in this contest. This contest is ours.
There you go. There you go. See, I told you mine would be quick. So now it's over to you, Brandon. You're gonna host the bulk of this program tonight.
It's on my shoulders.
It is. It's like always, really. I mean, I'm the John Madden. You're the Al Michaels.
I don't have
this one's going up.
Fine. I've got all day to sit around and do stuff like this.
Go for it. Take it over.
Nike recently submitted a patent in regards to the metaverse. And this patent includes such things as downloadable virtual goods, namely computer programs featuring footwear, clothwear, headwear, eyewear, bags, backpacks, sports equipment, art, toys, accessories for online use and in virtual worlds, retail store services, including virtual goods, footwear, clothing, headwear, eyewear, and sports bags, backpacks, sports equipment, art, toys, and accessories for use in online retail store services, and so on. So you're starting to see Nike being one of the first companies get involved in this virtual metaverse concept. It's looking more and more and more like this is going to become a reality, and shopping in the metaverse is now starting to take hold, at least the idea of shopping in the metaverse. And I think it's going to make for a very interesting future.
I tell you what, you know what? Since I have all this VR gear and I have multiple sets, you know what? Chinchilla Pickin needs to host an event in the metaverse. We need to host an event in the metaverse and invite all my VR friends. I mean, if Nike's going in on this, why aren't we with the first people doing this? Well, let's just get in there and be first.
I mean, think about it. You'll be able to go furniture shopping and you'll be able to visualize the couch in your room, the artwork that you want to put up, shelving unit, whatever, all that stuff. You'll be able to see it right in front of you. You won't have to leave the house. You'll be able to try on clothes without leaving the house.
You could do that now with AR apps. All the big companies have apps. I'm not going to name names because you and I have both have relationships with certain companies. But they have apps where they have AR.
Yeah.
And you could use them in your house and wave it around. Does the metaverse, does Facebook say how this is different than that?
Facebook didn't mention shopping, I don't think. I watched the whole connection thing, and they talked a lot about games and working in the metaverse, but I don't actually remember them talking about shopping. They did say that you're gonna have to pick out clothes to wear.
Yes. And to get the Nike brand, you're gonna have to pay them to get the Nike symbol on your clothes in the metaverse.
Yep.
From what I'm hearing, is Nike's patenting that. So it's just another move that this is happening, guys. This is real. If you're aware of things that are going on, you're aware of the Decentraland, of that metaverse, and you could buy parcels of land in Decentraland. I know Brandon recently looked into this. I know I bought a parcel, and I thought it was a great investment. But these things are taking off. These things are going to happen. They're probably a few years away from being something that every day, like everybody's like, oh yeah, you going into the metaverse today? Yeah. I think we're a few years away from that, but I believe there's a big enough base of VR fans in the world right now to create millions of people.
But who's going to have the most popular platform on the metaverse? That's my question. That's the reason why I didn't buy any parcels of land here. But a lot of people seem very excited about it already and already putting a lot of money up for it. But then my question is, with Decentraland, for example, what if Facebook makes a platform? What if Apple makes a platform? What if, and so on. So then what happens to those investments? And is that even possible to create
Yes,
Not much.
it's more it's 100% possible to create more virtual spaces and virtual worlds because yeah, I mean it's virtual. It's all just software. It's just ones and zeros. It's easy to do that. So everybody can have their own virtual world, right? So what virtual world do you want to be a part of? And yes, Facebook is going to have a big foothold in it because of Oculus. If Facebook owns Oculus, if you guys don't know, and Oculus is the biggest the Oculus Quest. Well, there's more than just the Quest for the Oculus, but Oculus has the Rift, the Quest, and a few other things with it. But the VR, like it has a base of millions of people already in the Oculus that have the Quest. I talked about this in previous shows, how many Quest sales there were and how it was third behind Xbox and Sony and how it was really getting up there. That means they passed Switch. I mean, you guys have to take that in consideration. They passed Switch. The Oculus Quest was a huge selling success for Oculus. And that's why I believe they're going forward with this is because they saw, okay, now we have a base of millions of people that are using our product. Let's create some place for them to go and just dive in and they could lose themselves in for hours and hours and hours.
Zuckerberg pointed it out as a huge driver of revenue for Facebook.
Well, I mean, yeah, I mean,
he singled it out.
Honestly, and I don't want to just quote the movie that everybody knows, but I do want to go back to this because it has a certain point. Like if you watch Ready Player One and the guy, and it's a fictional movie, guys, it's not real. It's fictional. It's off a book and blah, blah, blah. And it's just for fun. It was just a fun movie. But if you watch it in the movie, the guy goes into he puts on his headset, goes into the virtual world, and there's advertisements in the corner. I can 100% see Facebook doing that with Oculus.
Oh, for sure.
It's throwing an advertisement in the corner. No matter where you look, you're going to see that little advertisement banner in the corner or something.
So we've been calling it Facebook this whole time, but now it's Meta platforms.
That's going to take a while for me to change. That's going to take a while for me to change. I still call Google. I still call Alphabet Google.
And that's what I was going to say. Nobody calls Alphabet. They call it Google still to this day, and it's been years.
You don't call it Alphabet unless you're talking about the stock.
Right.
You call it Google when you're talking about the company. And those are two different things in most people's minds. Is like Alphabet, the stock, and Google, the company. I think that's going to be the same thing for Facebook. It's Facebook, the company, but Meta, the stock.
Yeah.
And that's the way it's going to go. But yeah, no, I believe Facebook has a very good idea here. They have a good foothold. Now they got Nike backing them up. This is definitely going to be a big driver in the future, as if they could get more people join in the VR world right now, because you have way more people playing PlayStation and Xbox Call of Duty than you do VR right now. And they got some catch up to do there to get into that gaming sector, but I think they're branching off into more than just gaming. They're branching off into like you could work from this, you can communicate with other people from this, you could see people with disabilities can go visit places and do things they couldn't normally do via the virtual world. You put on these suits. I talked about the full suit you could put on. It's like a wetsuit, right? That's the best way to describe it. You put on this wetsuit. It's $20,000, but you put on this wetsuit and you can feel everything as you're in this virtual world. And that's something I definitely want to try. And they have virtual. Go ahead.
They've got the AR glasses that they partnered with Ray-Ban. I think it's only a couple $100.
Yep.
So they're not fully AR yet, but you can answer your phone calls from your glasses now, take videos, all that. I think you can take videos. But
you can take videos, and that's where we got into the discussion of like what's the legal ramifications of people walking around taking videos of whatever they want. Mm-hmm. You're gonna see so many people on videos. This is I'm surprised that all these protesters, no matter what side you're on, every protester doesn't have like 30 people wearing those glasses taking videos.
Yeah,
you don't need to carry a camera anymore. I don't need a camera that you can knock out of my hands. I could put a ski mask on, go protest, put these glasses on. The ski mask holds the glasses in place. They can't knock it out unless they actually punch me. And if they do, then I got it on video.
Yeah, and you don't need a cell phone to record when somebody's pulling you over. Right on your glasses.
Exactly. You don't. I mean, I don't see why these things aren't selling out the like they can't keep up with demand.
They're not expensive.
They're not. I'm telling you right now. I tell you what, guys. I tell you what. If we hit 1,000 followers on Instagram, I will buy a pair of these glasses for one of our followers. I have no idea who our first follower was. But if we could get to 1,000 followers on Instagram, I will give that away as a prize. All right. You heard it on this show right now. And that's by Christmas. By Christmas.
By Christmas. That's December 25th. For those of you who don't know, I don't know that.
December 25th, 2020. Oh, sorry, it's 2021.
All right. Next week, Rivian, which is an electric vehicle maker, they go public next week. I think it's on Wednesday. Amazon owns 20% of this, which is why it got my attention, because if Amazon owns 20% of this company, then they probably actually have something that's worthwhile. Amazon has already placed an order of 100,000 vehicles for the company's last mile delivery purposes, and the e-retail giant is planning to land 10,000 electric vehicles early next year. This represents the largest order of electric vehicles ever. Apart from Amazon, Ford Motor also owns 5% of the company. The price range for the IPO is estimated to be between $57 and $62. At the high end, they would be already worth more than Ferrari.
Yeah, I'm reading an article here because while you're talking, it says Amazon T. Rowe Price have indicated interest in buying up to $5 billion in shares.
Yeah. So there's more than just them. There's T. Rowe Price Associates. There's Co2 Management, Franklin Templeton, Capital Research Global Investors, D1 Capital Partners, Third Point, Blackstone Alternative Asset Management, Dragoneer Investment Group, and Soros Fund Management. They're all indicating interest of purchasing an aggregate of 5 billion shares of the Class A common stock that will be offered.
Yeah, everybody's pushing this thing, man. They're saying it's going to be valued over $50 billion at the IPO. And yet I've never heard of a Rivian car on the road.
I think just this year they released their first consumer vehicle for the public.
And that's crazy that they're valuing it. So here's maybe me reading into this. I reading too much into this, but I believe that, it's a lot of these people who don't like Elon Musk are trying to pump up this car as a competitor.
You know what? It might be, but I visited their website today. They look like they may become sort of the Lululemon of electric trucks.
Lululemon of electric trucks.
Look at the car. It's definitely going to be the suburban mom that takes her family out to hike or to camp for an outdoor activity. That's what this is going to be, and they're going to be wearing their Lululemon outerwear.
You live in a suburb, so you're saying that you're going to have these things in your.
But no, it'll be the upper class.
Oh, so my suburb, not yours.
Yeah, it's your suburb, not mine. And they will be taking their curling irons camping with them.
There you go. There you go.
You know what? My big red flag on this, though, is that the R1T truck starts at $67,500. The R1S, which is coming out later this year, starts at $70,000. Now, compare this to Ford F-150 Lightning. I think it's probably a different demographic of customer, maybe, but the F-150 Lightning starts at $39,974.
Yeah, that's a big jump in price there, man.
Tesla's Cybertruck starts at $39,900.
See, Tesla had this problem too when they first started bringing cars to consumers, that their cars are very expensive and only high-end customers could buy them. However, over time, Tesla built up bigger factory lines, was able to produce more at a lower cost, and thus was able to lower their costs and of the actual end price to consumer.
And I think
that's what Rivian needs to do.
Yeah.
If they want to be competitive, they need to do, because GM, Ford already have factories that, they've had to cut shifts on because of chip shortage, everything that they could be repurposing right now to build electric vehicles. And thus, Rivian may be a little too late to the game unless they have some infrastructure already getting bought up and built in place. Then they might be good to go then.
For the years that ended in December 31st, 2019 and 2020, they incurred net losses of $426 million and $1 billion respectively. I mean, but their total debt right now, their total outstanding debt is only $3 million. So it's not bad for a company that's just now releasing products. Probably a lot of that, they probably raised a lot of investments to pay down those debts, but it's not bad so far, not on a bad track. I mean, they're not profitable yet, but you wouldn't expect them to be yet, I don't think either. So
Yeah, Brandon. I mean, honestly, when a new company comes out and they have some type of product that they want to offer that they believe is really good and cutting edge, they're not going to have a profit immediately. Nobody ever does.
right.
Usually it takes 5 years before you see a profit out of a good, stable company that's really building, because they got to take their money and they got to reinvest it to grow. And they have to buy factories. And do you know how much money it costs to build a 1.1 million square foot warehouse just to house
How much?
products for I mean, it's
It's a lot.
it's a lot of money. Let me put it that way. It's a lot of money. And so it takes money to grow a company. And so it's okay. I don't mind a new company, not having a profit as long as they're using what revenue they have come in a proper way. I would like to see the breakdown of it.
Hey, and especially in this inflationary environment where the cost of materials is skyrocketing, building those warehouses is crazy, that's why free cash flow for Amazon was down 91% year over year.
They're throwing up warehouses everywhere right now. Amazon's throwing up distribution warehouses, delivery warehouses, grocery warehouses. They're just throwing up warehouses everywhere. And it's taken a lot of profit out of their business. I tell you what, if we had a depression, all Amazon would have to do would have to say no more new projects. And then I bet you even in the middle of a depression, they would still be profitable.
Yeah, I think they would. I mean, they're big enough. They're scaled enough already to still make a profit on that. And we just jumped right into our next subject, and that's Amazon's Q3 earnings. Earnings per share came in at $6.12. That missed analyst prediction of $9.31. So a big miss there. Revenue missed. Analyst prediction was 111.8 billion. They reported 110.8 billion. Amazon Web Services revenue, however, did beat. Analyst prediction was $15.5 billion, and the reported Amazon Web Services revenue was $16.1 billion. Headwinds that were mentioned in the conference call: operations costs like labor costs or wage increases, steel costs, and transportation costs. They said labor is the primary capacity constraint. There's no surprise there. Free cash flow was down 91% year over year, from $29.5 billion to $2.5 billion. Now, free cash flow minus equipment, finance, leases, and principal repayments of all other finance leases and financing obligations. So basically free cash flow minus the stuff that they're buying and they have to buy to scale, down. And this is for the trailing 12 months, by the way, if you're an accounting person, down 122% year over year, from $17.9 billion to negative $3.89 billion. So a large portion of these losses is attributed to adding new warehouses across the country and buying new equipment. In September alone, they opened 100 new buildings in the United States. They are on track to double their fulfillment network over the 2-year period since the start of the pandemic. So you see what they're doing.
And you have to do this. You have to do this if you're Amazon, because they've made a commitment to the customers that in some cities they could deliver a product same day within hours.
Yeah.
And they could deliver a product next day, 2 days. In order to have these fast deliveries, you got to have warehouses everywhere, and you got to have a system of distribution that moves so quick and flawless. And this is an example of what we just talked about. It's a company investing in its growth. So Amazon is building these warehouses so they could give you your product you want as quick as possible. And because of that, like I said, Amazon, if they just said, all right, let's just stop the growth for the next 6 months, no more new projects, no more buying new land or anything, boom, their profit would rocket. And they're spending this money on investing on growing the company. They have the right idea. They're only down, I think it was $5 a day by the close of the bell. That was it on their stock. So, I mean, it wasn't even a percentage point, forget about it, dude. Right. They're flat. I don't know, man. I say if you're looking for a long-term investment, Amazon's a buy, even in inflation. I say it's a buy.
I have my red flag raised to half staff, but not all the way up.
Oh, why? Why is it raised half staff? Because
So-
I don't see a headwind. Even with inflation, I don't see a headwind here for Amazon.
So they're building very, very quickly, which they're able to do, and that's fine. But are they reacting too quickly to demand that may not be there in its complete form the way that it is right now in a year? So
No,
let me say
no.
there's a theory right now that inflation is pulling demand forward, and that people who are afraid of rising prices are going out and buying now and increasing demand now rather than waiting until prices are even higher in the future. I don't know if I believe that, but me and you have talked about how holiday demand can be pulled forward because everybody's telling you to go out and buy now, beat the holiday shortages. So is that part of it? For the quarter, sales were up 15% year over year. So net sales were up 15% year over year. So they're still growing sales, which that's good. But how much of that sales is buy now, pay later?
Well, they just started buy now, pay later, man. They can't have already figured that into the cost.
A firm's been with Amazon for a while though, and you've been able to use credit cards on Amazon. It's not just like
Gotcha. I got you. The credit card, but they make money off the interest.
Visa, MasterCard to do this.
Yeah, they make money off the interest of their credit card, dude.
But is this sustainable? I don't know.
No, and so what you're talking about is, and this is what we've talked about on previous shows. I see where you're going here. Let me see if I got this right. Right? Tell me if I got it wrong or right. You're talking about people like, I'll give the example of buying a bunch of toilet paper now because we think it's going to be low later, right? And so that has nothing to do though with like most of the everyday items you see on Amazon. I don't go on Amazon and look for like, my necessities, food, toilet paper, such as like that. If I'm going to stock up on that, I'm going to go to my local grocery store and I'm going to stock up there. Mm-hmm. Amazon is more of clothes and sometimes just random things you need around the house that you wouldn't normally get. Like I recently just got some carpet cleaner because my cat had a bathroom on my carpet, right? Mm-hmm. So I got carpet cleaner for that from Amazon, right? That's the kind of stuff I think most people are getting from Amazon, and no one's stocking up on that kind of stuff. But I do get your point as far as like, is it a buy now, pay later? Because we talked about this. I think it was right when we were first doing podcasts, when we first started, and I brought up the articles about people who got a Jeep Cherokee, right? And they owed $30,000 on it. It was $34,000 vehicle. They go to trade it in, it's only worth $25,000. Well, they say, well, we'll put that extra $7,000 on your next loan. So now they get a $40,000 vehicle, but they actually have a loan for $47,000. So they're already underwater. And the American consumer, and this was an article, guys, that was talking about, well, they were given actual figures of things that people have done right now this year, today in America. We are over leveraging on your debt. And that's what you're talking about. You're talking about being over leveraged on your debt, not being able to pay it. And then Amazon's going to have all these people defaulting on their debt. How are they going to still be in business if right now it's a buy now, pay later system, and we have defaults because of a recession, such as the mortgage crisis, where everybody started defaulting on their home loans? Mm-hmm. Is this going to topple the big giant? That's what you're talking about. Is it not? Am I wrong?
No, that you're right. Look,
my answer is no. My answer is no. They have too many consumers that are not using the buy now, pay later.
I don't think system. They're going to go under. I don't think they're going to go bankrupt or anything like that. But the question here is, are we right now as an entire economy, if you're looking at it from a macro position, are we in a credit bubble?
Yes. Yeah. The United States consumer, yes. The United States consumer is in a big credit bubble. People did not learn the lessons of 2007, 2008. They are still, they forgot it very quickly. And now we're doing the exact same thing again.
According to the American Payroll Association, somewhere around 50% of American consumers are living paycheck to paycheck. Well, that's just American adults, basically, if you say American consumers.
Whoa, 50% are living paycheck to paycheck?
If you look at the studies, it's anywhere between 50 and 78%.
I am shocked right now. Shocked that it's that bad.
Yeah. And the crazy thing too, of consumers that make $100,000 or more, 40% of them are paycheck to paycheck.
What?
Yeah.
Wow. Wow. I'm just I don't even know what to say, man. I wish people could see the video right now of my face when you're saying this, because I am genuinely shocked. I know I shouldn't be. I have a deep skepticism about American consumers, and I shouldn't be that shocked, but I am shocked that these numbers are over 50%.
So my question, and what I'll be paying attention to this holiday season, how much of the holiday online expenditures are being done with credit cards? And what is that relative to prior years, and comparing it to that? That's what I want to see.
Guys, look, holiday gifts are no reason to go into debt. Don't do it. Don't go into debt for holiday gifts. If you don't have the money to buy gifts for someone, it's okay. Send me a card. I'll be happy if you just send me a card, send me a picture of your family. I'll put it on my wall. It'll be fun. It'll be great. I don't need a gift. Save your money, pay your debts off.
Yeah. And that's I don't think people are sitting at home and calculating the M1 and M2 money supply of the United States, because most people don't have the time or the patience to be.
Have you read the whole articles on those? Is that what you're telling me? You've read every single page of this 1,000-page document?
No, not all of them myself, but
some of them. See, guys, you see how he has it? I want to point this out to our podcast listeners. This is the guy I'm doing the podcast with. He did not deny. He has sat there and read a lot of these pages, and he just has said, no, I didn't get to them all. But nobody reads this stuff, but Brandon Beaver reads this stuff.
But I don't think people are sitting out and thinking like, oh, should I go buy, I don't know, a PlayStation 5 now, or wait, and maybe that price will go. I don't think that's the case. But once people start to think, what people can visualize better are shortages. And if they're afraid of those shortages, that could pull demand forward, even though we're actually having the shortages now.
Yeah. And it will pull demand forward.
They're afraid that it's not going to be there in a week. They'll buy it now. But I don't think they're going to sit home and calculate inflation and try to figure out how much the price is going to go up, But
and so what you're going to see, Brandon, what you're going to see, if this is true about pulling the holiday forward and buying it now because of shortages, you're going to see an uplift in the economy right now. And it's going to look great, but then we're going to have a really bad, quote unquote, holiday season. And so when Q4 reports in the winter of next year, 2022, January, February, you're not going to have the stellar numbers you're looking for.
I don't know. I'm not predicting that's what's going to happen. I'm just laying it out as a possibility and something people should watch.
Right. And if that way, I mean, and I'm going off your theory and giving you another theory on top of that theory, but I got my derivative play here off of your theory. But if that's the case, and you're going to look at, the depressing numbers on your earnings, and, that's not something I want to be buying into.
Me either.
I'm not going to be holding Macy's and Walmart and all these other companies into January of next year. No.
I'm posting the article from zerohedge.com where they offered up the theory that we're pulling demand forward because of inflation fears. I think it's more because of shortage fears, but they did raise a point that made me think. So I'm going to post that on the show earnings page, and I'll post the prospectus for Rivian as well.
There you go, guys. All right, guys, you got my calls. Definitely buy a KULR. If you're looking to trade it, wait for a dip down. Nvdia, if you already own it, hold it. If you don't own it, buy it for a long term. It's a great buy. It's going to continue going up. It's going to beat inflation because they can name their price. Those are my calls. Some shout outs that I need to make today on the show are, please follow us at Chinchilla Picking on Instagram. Get us up to 1,000 followers by Christmas. That would be great. I would love to give away some glasses. That would be a fun thing to do. Also, if you want us to come to your college and put on a show and do a live podcast on Instagram or some other social media, we'll be happy to. Just reach out to us, DM us, let us know. Brandon and I will come there live, and we'll make you laugh, make you cry, and give you some good stock advice, hopefully, and answer any questions. You can throw some company at us in a lightning round type of thing, and we'll see if we can answer them. Brandon, what you got? Final thought.
I want you in Meta, And I mentioned last week, Lockheed Martin, it's not going anywhere. The stock's been a little bit depressed because they did call for, well, they guided towards slower revenue growth in 2022. But if that's what you're paying attention to, that's not what you should be paying attention to, because they also said they're accelerating dividend growth and they're accelerating buybacks throughout 2022. And they're also guiding for accelerated growth in 2023. So you'll get this spring getting coiled and coiled and coiled, because they're going to be buying back their shares, increasing your ownership of the company. And once that growth in 2023 becomes apparent, then the stock should move higher, and it'll probably do it pretty quickly. So
there you go. Cool. All right, guys, as always, we hope we've been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night. If you've listened to our podcast before, you know that we are good friends with the Money Vikings, and we think that they have a lot of good knowledge and, just a wealth of knowledge to offer. About 60 years worth of knowledge and trading experience between the three, between Greg, Bob, and Jerry. Now, I have some good news for you, because they have announced a premium program. It's the Money Vikings MVP premium content. Okay. And I have to tell you this right now. If you are new to the market, you have got to have somebody to mentor you through it, because 75% of all new market entrants will lose all of their money in the first year. And you have to have somebody that will guide you through it to prevent you from making these mistakes that most people do. And with this MVP access, this premium content, you will get direct access to Greg, Bob, and Jerry on Discord. That's the most important feature of this program, in my opinion. They do also have access, well, they will give you access to other things, such as hot trades, weekly newsletters, technical analysis. Hey, it's ad free. That's cool too, right? Guides and tutorials, tools and custom technical indicators, exclusive analytics and informative articles, and then, as I said, exclusive direct access to Greg, Jerry, and Bob, who have over 60 years of experience between them. Now, if you listen to this podcast, you need to get a pencil and you need to get a paper and you need to write this down, because you get 25% off. Once you go to moneyvikings.com and you sign up, you'll get to enter in this code. It's capital TMV P1CK1NS. That is all capital TMV P1CK1NS. An easy way to remember that is TMV Pickens, but the one replaces the I. So go to moneyvikings.com, claim your discount for being a chinchilla picking podcast listener, and conquer your financial freedom.